Hey everybody, welcome to today's episode of Stocks for Breakfast. My name is Pete Ranzulli. It is Friday, April 17th, 2020. Well, we've made it to the end of what many are considering right now an exhausting week. A lot of people have been wrong so far on whether or not the market is going to sell off and how hard it's going to sell off. There's a big difference in opinions right now on the stock market versus the economy. They are not the same thing. One thing that's very important, I think, and I usually don't use the words right and wrong, but I'm using them this time in the context of how we're reading the tape, not so much whether or not a trade made money. And we've been very clear this week for the reasons that you would get long or would get shorts. In other words, long meaning buying, short meaning believing the market's going to go down, and you either sell out of your long or you sell short, which is a position the same as buying a put where you believe the market will be going down the same direction. I just want to pull it up very quickly. We're actually going to talk about a moving average crossover system today for profit taking. You can also use it for entries and exits, but I'm going to use it in the context of profit taking. But I want to show very quickly something. This was yesterday's game plan image of what I believed was going on in the market. And you'll notice a very soft teddy bear instead of a grizzly bear, and bear market selling feels soft. The reason I wanted to bring that up today is because having your bias going into the day will greatly affect how you plan to trade. And I touched on it a little bit in yesterday's best stock picks video for today's game plan, the 17th. It is imperative that you understand for longevity as a trader that the more prepared you are going into the day, the easier it's going to be for trading to be simple and structured and a process. And I'm going to throw a word out there that you might not equate with trading, which is predictable. It can be super challenging to run scans every day and trade stocks you've never traded before, or stocks that you aren't prepared to have an argument for. And I always stay away from the word feeling because you can't teach feeling. That comes with experience. But what you can have a feeling about is the amount of preparation you've done. And and I'll give you an example of a lot of traders who failed to succeed when I owned my trading floor in my trading firm in New York City. It would be traders that would show up late. Let's just say, for argument's sake, they'd get to their desk at 9:15, 15 minutes before the market opened, unprepared, just not ready to trade. And they'd be scrambling around for 15 minutes, either doing their own quick work or they'd be asking other people what they were looking at that day. And they didn't make it because it was impossible to have conviction in their ideas. The opposite of that is somebody who comes to the market, does their homework. Yes, it's homework, but you're kind of on a treasure hunt, right? You do your homework a few hours after the market closes, or as soon as you wake up in the morning where you got a little bit of extra time to do that. But never as soon as the market's opening, because anything could happen. Your computer could go down and then the market opens and you're not prepared. So you want to be well prepared before. And the conviction you have in your homework, the conviction you have in building that argument for your trade, the more conviction and less stress you're going to have about actually allocating capital to those ideas because you did the homework. So that's a big deal. It's a really big deal. And what I would suggest you do, like I do my work on the sevens. So if you're a part of the program, the coaching program, and you've watched the section on creating a game plan, I do it 7 p.m. at night, where I do my first initial run through of all the charts and everything like that. And then the next morning at 7 o'clock, I review everything to see if there's any outlier type news in any of the stocks that I'm trading, and if it would affect me not trading those stocks anymore. I generally don't like to trade heading into news. I like to trade after the news because those trades to me are a little bit simpler. So what I'm going to do now is I'm going to just take a look at one chart of stocks that were stronger week for this week and how we're going to trade them today. We actually did mention yesterday we were going to short the financial stocks, and we mentioned we were going to be long technology stocks. For the most part, both of those played out. the choppiness of the market itself stops some of the financial stocks from having um, more forceful, I don't want to say a better day to the downside. It's kind of an oxymoron. More momentum to the downside. So they became a little bit choppy with the market. But my point again is that soft bear market, you can't put a feeling on how a market feels, but what we can absolutely do is say, well, we're reading the tape and the market's not going down and there's no indication that we should be selling. So why is everybody screaming about selling? Because they're talking about the economy and how that's going to affect the stock market later. It's not talking about today's trading environment, which is why we're looking at the daily and the weekly charts for the most part, because we're trading in an extreme environment in the sense that there's new news every single day. And actually, we're going to take a look at that right now. So we're going to get right into the moving average crossover system for trailing profits. And then we're going to take a look at this news story. Actually, we're going to take a look at the news story first so we can get that off the screen. So we saw yesterday afternoon the market would not sell off. And now today we're seeing that Gilead has reportedly, this is the key word here, reportedly shows effectiveness. So looking over at the stock, Gilead, you can see it's been in a trading range. It's up almost 11% after hours. So again, if you noticed yesterday, I don't generally personally trade biotech stocks. For this exact reason, quite honestly, I like my trades to be simpler, where I'm just trading earnings and price action back and forth, between earnings season from one quarter to the next, and the order flow in between there, and then the momentum in between the order flow. But this is an interesting story and potentially a good story. And again, I can't stress enough, reportedly. So do what you wish with that price action. I just wanted to point out something that should be in play today. But really, this is the most important thing for all of us, regardless of what you're trading today. Dow futures and ES futures are up today. We're going to take a look at the ES futures before we get into I'm a little bleary-eyed today, a little tired. And you can see I got the moving averages on the chart, which I don't normally have. I'm going to talk about that. But here's the futures today. The S&P futures are up big this morning. You can see they closed strong and up further. So that's the market that we're opening up into today. We're going to go back to the daily charts, the weekly charts. We'll look at the SPY and we'll see how that's going to affect everything. We did have that line in the sand. We did not cross the line in the sand to the downside. We still have a bullish week, and you see we're up pretty strongly again. So those of you that were following the game plan and the analysis every day, you'll know we were well bid. We were above the open. We were above the open for 2 weeks in a row. Strong price action, right? So there's no reason to predict or forecast anything. It's our job to pay attention to what is happening and then just trade that price action. But what we can do now too, and I'm going to point out what this is, I have on the chart a 10-period moving average and a 20-period moving average, both of them simple. Okay, and I'm going to use Microsoft as an example. And we're going to use this as a moving average crossover system. So let's just say, for argument's sake, now again, this price action to the downside is kind of extreme in both directions, but we're going to use them anyway because obviously massively bad news that moved the market quickly, and we had what many are considering a short covering rally or a dead cat bounce, however you want to word it. So this type of fast price action is not normal. However, we have to trade what's in front of us, right? So what I want to point out here is the turn. That's the most important point. So let's just say, for argument's sake, you happen to be short, you believe Microsoft is going down, and whether you bought puts or whether you actually sold the stock short, doesn't matter. You believe the stock was going down, right? The two signals here, one is a quicker one and the other one is to trail a profit. The first one is when price action crosses above the short moving average, so closes and crosses. So you get, in this case, closes above the 10-period moving average, and then when the 10-period moving average crosses above the 20, that's the second piece of the trade. So right here is where you would, if you were short, would be the exit for half or one piece of your share size. It could be 2/3, it could be whatever. But as this moving average is still below this moving average, so the 10 is still below the 20, you're still holding a piece. So while it's dancing back and forth here, you're hoping this kisses this and rolls over and moves down so that you can maintain your position. In this case here, you could see roughly about a week later, moving average actually crossed back up and you would exit the entire position. And when I say you, I mean you in general. I'm not speaking to somebody specific because I can't tell anybody what to do, nor would I. But the next question you have is, well, what if this actually trades down and we get out of this piece here? And what if this does not cross over? What if this goes like this and rolls over? Price action here is above, right? So you would re-enter your short sale when price crosses back below the 20 period moving average, which is the same as the opposite side. So you would get out quicker if it crosses the 10, get back in if it crosses back below the 20, because the 20 is your trend moving average in this case. So I just wanted to point that out. And can you use this on intraday charts? Absolutely. Whether you want to use a simple period moving average or an exponential period moving average, that's completely up to you. But again, you can see if we look at this on some shorter time frames, you could see how you would have held Microsoft despite the fact that you would have got out of a piece of it here. Price action crossed below, but the moving average didn't until all the way over here. And by the time that happened, price actually bounced back, and you would have ended up holding it up till this point. So you could see in a few stocks exactly how it would have worked. Now again, yesterday was choppy, so something that's important. Moving averages work better in trending situations. Stochastics and reversal type indicators work better in choppy type situations. So right now we actually happen to be in a choppy type situation right on an intraday basis. So right now you'd be using more stochastics, RSI, MACD type of thing. But the reason I actually have these charts in my screen today is these stocks meet the criteria for long or short, meaning in other words, they had good positive days, but that doesn't mean they're trading opportunities. If you remember yesterday, they actually, we talked about Wynn. Somebody had asked, I forgot who it was. I apologize. But Wynn is in a trading range. This is the right price. There's nothing to do right now. Intel is actually trading well and has some room to go if it can clear the 61 level tomorrow. You can see we got room all the way up to 68. So we'll be looking to initiate a new swing trade in Intel. I'd probably have it around 61.50 as a buy stop because I wanted to get above that level. We basically have this trading range, but the tougher part about Intel is you really need to be patient with these because you can see it actually moves. Excuse me, and then goes sideways, moves and goes sideways. So you'd have to be patient. This $7 profit potential would probably not be something that you'd be micromanaging. Next one we have Take-Two. Something interesting is a lot of these types of stocks, Take-Two, ATVI, and EA, all having really positive price action recently. So you can take a look at that one. We actually talked about that in best stock picks for today, the game plan, and ATVI as well. So that's definitely a sector where money's doing the same thing. You have something going on there. AMD, we actually called out yesterday, maybe one more day if it opens flat into resistance, which actually looks like it's opening higher right into resistance. So if you happen to be long AMD, we had an inside candlestick breakout here. 1, 2, 3, 4, 5. Today would be the 6th well-bid candlestick in a row. And you know that's kind of the area we look for prices to exhaust themselves or saturate. Those are what I call saturation plays. So if I was long from this inside candlestick breakout in AMD, I'd probably be looking to scale profits into resistance here. At least trail profits, move up your trailing stop loss, and if it turns around, you will end up being taken out with a profit on that trade. And Twilio actually met the criteria, again, for a breakout as well. I want to mention a question that Elv brought up, and we will use, what can we use? Let's use Microsoft as an example, because it actually had a good trend day yesterday. He had asked he or she, I'm sorry, ELV. I don't know if that's a man or a woman. I apologize. But why do I use the opening price every day? And not only do I use it on the daily charts, but I use it on the weekly charts. I use it on the intraday charts. Our job as traders, and I'm going to go out to the weekly chart here. Our job as traders is to determine if the order flow is obvious. If order flow is obvious, then we drop down to lower time frames to see if the current order flow, meaning right now, whatever time period we're trading. So if it's a swing trade, you're looking at the weekly and the daily charts. If it's a day trade, you're looking at the daily charts. And today, meaning the intraday price action, we want to know, is the current order flow doing the same thing as the longer term order flow, so we can reasonably expect a high probability of following through in that direction. So you can see what's going on here in Microsoft over the last couple of weeks. Where well bid, well bid, well bid. So 3 weeks of well bid price action. Then we go down to the daily charts. We have pretty much the same type of action, but we go into these trading ranges, right? So over a longer period of time, Microsoft is well bid, and we should only be looking for opportunities to buy. So if we drill that down to the 5-minute chart where we just drew this opening price, right? This is the open. That's the opening 5-minute candlestick of Microsoft. The better trades, the trades that have the higher likelihood, where right now is order flow, meaning today's opening price, that's our tape reading line in the sand. As long as price is above that, it's a better likelihood that those trades will follow through. So you would be looking for trades above to move. So when we're below, you're not even looking for it. When we're above, you are. And you can see the kind of follow through that you get to the upside, where those trades just follow through. So Elva, I hope that answered your question. I hope everybody else actually really understands why I do that. I just can't emphasize strongly enough. Following the opening price, well bid and well offered over multiple timeframes is the basic structure of understanding how to do tape reading. There's obviously a lot more. We can cover that every day. We do cover that every single day in the coaching room. But the point I want to get across is this: there's chart reading where you're just looking at patterns. There's tape reading where you're setting and building arguments, and then there's trading where you're looking to understand how to make money. So it's my job, not my job. I hope it's my job. I hope you're listening to some of my advice as trading advice as far as education, to help you understand that there's 3 stages. There's chart reading, there's tape reading, and then there's trading, where you're actually moving past, where you understand what you're looking at, and then you understand how to make money. So hopefully you're taking good notes and then adapting everything that I'm showing you to your own personal situation. So anyway, we're going to open higher today. No major news coming out today. The only thing is the restructuring of reopening the country according to the politicians. We'll see how that unfolds. It seems like cooler heads have been prevailing the last 24 hours. So that's what we got going on for today. The game is long until we see a reason not to. 277.14 would be that same level we're watching in the SPY as of right now. We will bid opening higher. Again, using what I just showed you about the opening price and whatever stocks you happen to be trading, that opening price action also keeps you on the right side of today's price action. So in other words, if you open higher and you're trending lower the whole day, probably not the best idea to be looking to get short, to get long, to be buyer, unless you have a good opportunity where you have a really good solid support level. So anyway, that's today's Stocks for Breakfast. Hope you have an awesome day. Please be safe. Please subscribe to the channel and have an awesome day of trading. Have an awesome weekend. Recuperate. And oh, by the way, if you're in Smart Money Alerts, look for a follow-up email. We're definitely going to end up doing one of these live each day per week, so we can have some question and answer back and forth on YouTube. So have a great day, everybody, and I'll speak to you soon. Take care.